Hello guys, welcome back to another video of AGR Trader. So what if I told you that two simple patterns that could help you catch the trend reversal in the stock market before it happens? Sounds like a cheat code, right? Well, that's exactly what does and double bottom pattern and double top pattern does. But be aware, just because you spot it, it doesn't mean that you jump in blindly. There's a right way to trade it and a wrong way that could cause a big loss. So in this video I'll be breaking down the double bottom pattern and the double top pattern, how to spot it, how to trade it smartly, and most frequently asked questions or the questions which comes in your head after seeing the chart patterns. What is double bottom pattern? Alright, when the stock suddenly bounces off a certain price level, not once but twice, this forms a W shape on the chart as you can see on the screen. So that is our double bottom pattern. The question comes in your head, why it happens? It happens because when the buyers step in the market at this same price level twice, showing this zone is a strong support. Now you can ask me when to enter the trade in this kind of situation. The double bottom is not confirmed until the price breaks above the resistance level, which is the top line as you can see on the screen. Okay, I'll make it simple for you guys with a short example. Think you are opening a locked door twice. For the first time it doesn't open. For the second time it doesn't open. But the third time you finally found the right key and break through it. To trade the double bottom pattern. So the step 1 is to identify two distinct lows of the same price. The second step is to look for breakouts above the resistance level. The third step is, once the breakout happens, wait for the another candle. If the candle broke the resistance, then that's your entry. Step 4 is to set your stop loss exactly or below the second bottom to manage your risk. So the step 5 is to target the profit, which should be equal to the distance between the bottom and the resistance level. Now we will see the double bottom chart pattern in the real market. So what was the first step to trade it is to identify the two distinct low of the same price. As you can see here, I have marked over here. The second step was looking for the breakout above the level of resistance. As you can see here, there was a price which broke the neckline over here, but I didn't take a trade. Why? Because the third step was, once the breakout happens, wait for then another candle. If the candle broke the resistance, then entry. So as you can see here, after it broke, it didn't form another candle, so it came down and again crossed the, or you can say break the neckline, so it formed a candle over here, so I took the trade over here. So the fourth step is to set your stop loss exactly below the second bottom to manage your risk. So as you can see here, it is our first bottom, it is our second bottom. So I have set my stop loss over here exactly at the second bottom over here. And the fifth step is target the take profit, which should be equal to the distance between the bottom and the distance level. As you can see here, this is our bottom, this is our resistance line. Now we will move to what is double top. Imagine a stock is going up and up and up. When it hit its highest price, where it struggles to go more higher, it drops, tries again, but fails at the same point. Now if you look at the chart, you will see an M shape, two peak at the same level, that's a double top. These patterns tell us a buyer are getting weaker and seller might take over. It's a sign that the price could reverse downtrend soon. How to trade double top? Just because you see two peaks doesn't mean that you should sell immediately. We will see steps to trade in a double top pattern. First one is to wait for confirmation. The pattern, if the price breaks below the neckline, which is also called as support. So second one is enter your trade. When the price falls below the neckline, that's the signal to sell. Third one is set your stop loss above the second peak to protect the capital in case the pattern fails to do. So the fourth one is target your profit as same distance from the neckline and its peak. Now we will see how to trade the double top pattern in the real market. So now as you can see here, there is an resistance, there is an support. So the market was going up and took the resistance to tap the resistance 2 times over here, and came down and finally broke the support line over here. So according to the steps, we have to place our stop loss exactly at the second top. See, as you can see here, I have marked over here. So I actually took the risk to reward ratio 1:2. You can take it equal also, like the distance between the resistance and the support, you can take that much also for your safer side. Sometimes you might think, what if the double top fails? Sometimes the price fakes the drop but shoots back up. So this is called double top failure, or you can see it also as bear trap. If the price breaks above the resistance, the trend is likely more continuing upwards instead of reversing. Coming to the end of the video, so always remember that if the chart patterns form double bottom, it is in W shape, and always wait for breakout above resistance. If double top, it is in the M shape, and confirm with the break below the support. Just most important is that don't jump into too early. Always wait for the confirmation, set and stop loss, and watch for a fake breakouts. Master these patterns and you will spot trend reversal like a pro. If you found this video helpful, don't forget to smash that like button and subscribe for more trading tips. Thank you for watching. I'll see you in the next video.